Hello, everyone, and thank you for joining today's webinar. My name is Phil. I believe you know a lot of you knows me already, and I'm one of the customer relations person of ChicagoDealVault. So today I was tasked by Hugo to start the meeting, and welcome you all to the webinar about rental and flip property insurance policy adjustments for 2022. So if one of the properties is in trouble, like caught on fire, natural calamities such as quakes, floods, and others, are you certain that it's adequately insured? And most of the investors think that they have insurance. Everything is covered. Well, the fact of the matter is that it is not. We are lucky today as one of our partners who is the owner or principal agent of Mccarthy and the company LLC Insurance Services will share with us his expert insurance policies. So friends, help me welcome Sir Patrick McCarthy.
Hello, how are you? Can you hear me?
Welcome, Patrick.
Thank you for having me on here. Thanks to Hugo. Thanks for everyone for getting that set up. I'm trying to figure out how to play my. There we go. All right. Um, uh, so I am an insurance broker here. I'll go through some of the slideshows, and then they gave me about an hour here, which is really the exciting time to talk about insurance for a whole hour. Who's ready for that? I'm going to try to make it a little more exciting than that. Basically, our insurance company does everything here, but we tailor a lot towards the investor. We have products that go along with that: umbrella, bonds, general contractors, insurance, stuff that I will share in here. So, okay, that was it. So, tonight's outline. I'm trying to move this so I can see. Okay. Who we are and what we offer, our products and service for real estate investors specifically, why choose us, the specialty dwelling and MCI, that's Mccarthy and Company Insurance, little thing for us, vacant and landlords, claims, process and trends, best practices, pricing packages, some sample of hold harmless for subcontractors, which I sent over to Bill, is it? Sorry, I'm so sorry. Hugo's the guy who's running the show today. I apologize. I could not remember your name. Other products we offer, out on home, and then the umbrella. A lot of people call us up asking about the umbrella and about needing it for the business. I'm going to go over a little bit of that, and then how to contact us, and then Q&A, little questions and answers. I figure that's a better way to do it. So let me start off here. Oh gosh, no, I'm not leaving meeting. How do I go on to the next page? Is everyone seeing the screen?
Yes, we can see your screen, Patrick.
Perfect. Here, I'll do a little. Okay. Hopefully this pops up. If it doesn't, tell me if you can hear the sound.
Looking for a better insurance experience? You're in the right place. Our dedicated team consists of experienced professionals and specialists, and we're ready.
Can you hear it? Okay, good.
Ready to serve you. How can we call ourselves specialists? Because we are. We've taken special training to become a certified specialist by the foremost insurance group. And they've been around since 1952, writing all kinds of insurance, so they know a thing or two. What's so special about choosing a specialist like us? We bring you our focus and expertise. Think about it. You probably have a lot of specialists in your life. Your trusted dentist, doctor, mechanic, and more. You should add us, your insurance agency, to that list. By focusing our energy on specific products, we provide you with accurate, timely, and personalized advice. Now that's service. We're real people focused on client care. We're independent, which means we work for you. And we're specialists, invested in increasing our expertise to bring you a better insurance experience.
All right. I guess at the end, I'm going to have to find out what's more painful. Like, as I said, that we got to be part of your team of doctors and dentists. What is more painful, going to an hour of insurance or an hour at the dentist? All right. I'm guessing everyone's muted, so that's why they're not laughing. How did I get back to the other thing? There we go. All right. So what specializes us and helps you guys out as real estate investors? So we specialize in doing the rental, landlord, and vacant insurance policies, vacant under renovation, new building construction, which is builder's risk. A lot of times people get that confused. Builder's risk does not include the existing structure. So builder's risk is ground up without any insurance for the existing structure. So a lot of times that's used for additions, stuff like that. We do all kind of things like commercial auto. Contractors is a big one. A lot of times villages are going to require you guys, if you purchase a property to either flip or, for long-term hold, they're going to have a, make you jump through some hoops. And of course, as we're a part of your trusted 5 people in your life that you can include in your phone, you just call us up and we can help you get those things. A lot of times it's just a waiver of subrogation against workers' comp, and then getting a bond for the village, and getting a liability policy enforced, a general liability policy enforced as a general contractor or as some other thing. But that's what we're here to help you with. We've done this since the very beginning. I was going to open this company, and we've kind of tailored our products towards this area. So we have many carriers. That's the beauty about being a brokerage. We don't just have one carrier. Now, Foremost made us that nice little video there, but we have plenty of other companies to fit your needs and specific stuff. So let's see here. God, I cannot press that button. That's not the right one. All right. We understand that your bottom line net profit are the most important parts of rental landlords. We try to keep your premiums at a certain rate because we know that goes in to the bit, what's the net gain on that. Even on flips, we're trying to find if it's supposed to be a quick flip, depends upon how much renovation. We have companies that give no minimum premium. That means you can only use the amount of insurance that you use, you get refunded back the rest. There's also, we've been working with ChicagoDealVault. So if you reference ChicagoDealVault up, if anyone calls up to get a quote, please reference that up so we can remember, and we'll get you out quotes in less than 24 business hours, depending upon what time you request it, obviously. And we have a team here that will send you out a questionnaire and have you send it and get you out prices. So try it now. Okay, so here's something that I thought I just kind of added in here at the end. I added some things about the claims process and recent trends. So I didn't know where to really fit this in, but I think this will be good for the questions and answers. So a lot of things that we see come across on the vacant and the investor end when it comes to losses are wind, hail, tree falling on the house, something like that, water losses, and vandalism. You could get earthquake coverage and flood coverage and all that stuff. But part of insurance is about taking on some of the risk yourself, right? And that I'll talk about later on, how to take back on some of the risk is having a larger deductible. But when we're talking claims specifically, maybe I should have put this slide in afterwards, but I'll let it roll here. What I always say is get an estimate before filing the claim, unless your house or your rental property is on fire, or if there's active leaking, or if it's something that's inhospitable. You always want to make sure to get the price, because it may look worse than it is, and you end up filing a claim and then retract it, but that'll always stay on there. That's part of the number. The next thing, don't let anyone on your roof or file a claim on your behalf either. You get a lot of people knocking on the doors when there's a windstorm, and neighbors have done it. This area, we're in the backyard of all the major carriers, all State Farm, they're in Central Illinois, there's American Family, Country Financial, all around here. So there's more those renovation type restoration companies that go around and are basically storm chasers. So remember, the claim stays with the property or the named insured personal or business, the LLC, and the physical property for 5 years, and they surcharge for 3 years if you have a loss. So that's factoring in that part of, getting an estimate before filing a claim. You're going to say it's a $5,000 estimate, I have a $2,500 deductible. My policy is going to go up $300 a year for the next 3 years. The net profit is what, right? Is it really worth filing the claim for that in case something else happens down the line? So another thing, so some of the trends that we've been seeing is, since COVID-19, we've seen numerous amounts. I mean, just so many homeowners losses. Reason for that is these houses and the systems that they have, the plumbing, the electrical, all that have been running like 24/7 because people are working from home. People are taking dumps, excuse my language, going to the bathroom and flushing things down the toilet. Normally when they would do that at work, they're doing it now at the house, and everyone's living in the house. So the house that's been built in 1940 has never had this kind of use before. So we're seeing bursted pipes everywhere. We're seeing just lots of homeowners claims because the houses have never felt this kind of use before. Trying to minimize some things so I can see the rest of my stuff. All right, so due to these losses, we've seen rate increases across the board. So some of these price examples I have on here later on, they might have gone up a little bit because inflation's gone in and also because of losses. Now, auto policies have gone the other way. We've seen rate decreases because people are working from home, less driving. So it's kind of been the opposite, unfortunately, for investors right now. The rental market is a little higher than it has been 2-3 years ago. The vacant market, not so much if you're doing the flip, but if you turn it into a rental, but there's ways to offset that, and that's the next slide here. If I could figure out how to do, there we go. All right, options to reduce cost and best practices. And some of this stuff I'll have available to share with you guys. So ways to offset the cost are by increasing the deductible. We recommend $2,500 to $5,000 or even higher on vacants and landlord policies. One, it deters you from filing those small claims. If you have a higher deductible, you think before and you get that estimate before you get it. You're not just thinking about calling the insurance company right away, because even if you decide to not go through with the claim, the insurance company still classifies that as a loss because they have to send someone out. They know something did happen, and so you have too many zero payout losses that will impact your rates. Another thing, when doing renovations, have all subcontractors sign a hold harmless agreement. CYA, cover your assets, cover your ass, whatever you want to call it. You got a lot to protect here. It's a simple piece of paper, and you have them, all your contractors sign off if you're doing renovations. Always require tenants to have their own renter's insurance for all your landlord policies, and have them list your business, or if it's your personal, whatever it's titled under, as an additional insured. So if the policy cancels, you get a notice of that. Because I've had recently just tenants are angry at their landlord because their pipe burst, and all their personal property got damaged. Now they let their renter's policy lapse. He has the clause in his lease to say that they have to have renter's insurance, but the way that the tenant renter thinks is, that was your pipe, you damaged my crap, why aren't you paying for it, right? And then you got an angry tenant. So keeping them, making sure they have a renters/tenant policy in place, meaning covering their own personal property, will save you a headache later down the line. So, and then if you always ask to be additional insured, if you just keep it as a standard practice, make sure it gets done. Some people think, oh, it's an extra thing I got to do. It's just, if you make it practice, it makes it so that it's airtight and that you don't have any places that people can come in. And this guy wants to sue him. Sue him for what? I don't know what he could get, because the guy didn't let his personal property insurance lapse. And unfortunately, there's no insurance for his personal property. But now the landlord has a very pissed off tenant. So, and I'll do another thing on there. Okay, cap out your LLCs or entities, meaning like open up a new LLC or entity when you got 4 or 5 properties, or if a judge ever said you have to liquidate those assets, make sure it's under $1 million in assets. If you put 10, 15 properties under one LLC, you're going to need that business umbrella, because you're putting it's kind of doing the opposite of what you wanted to do by opening up the LLC, is to kind of get it out of your name, but also limit the exposures, right? So opening up another LLC or a series or whatever there, and cap that off if you have a rental properties. Also for, I would keep different LLCs for the renovations, for the property management, and for the holding company. But the next one, treat your business like a business. Do not commingle funds. So you get your own checking account for that one. You pay things out of there. Then you can never be, your personal assets can't be exposed. That's the biggest reason we're saying this, is that you don't want someone to be able to come back, sue the LLC, and also be able to access your personal assets. All right. If possible, do not let the tenants know who the landlord is. So if you're the landlord, you do not want the tenant to know your phone number or where you live. Obviously, that's not. A lot of people I insure create like their own property management, have a separate LLC for that. And if the landlord complains, they'll be, even though he actually owns the property, or she owns the property, whatever. He all he has to say is, "Oh, I'll take it back with the owner." I'm just the person that does the property management. Sorry, And it kind of gives a barrier between you and and the actual tenant. There was the other. Again, if possible, do not put properties in your personal name. A big thing, people are trying to refinance, and that's understandable. The personal interest rates are way at all-time low. Commercial interest rates are higher. You quit claim deed it in your personal name, you have, you got that lower interest rate, but you've also exposed how many more assets that would be. So if you roll, they say, 5 properties to refinance to get some money to spend somewhere else and do that, you're putting those assets in your personal name, and those are liable to be sued against in case you have a claim. And most of the claims are not even resulting from your properties. A property is something that's stationary, and I'll explain that on an umbrella part. The biggest thing is what you guys have in your garage. That's your biggest risk exposure. All right, some samples of hold harmless, and this is what I emailed. I just gave some things about, you just drop it in here. If you have to put it in a different language, you can just go easy to Google Translate, have them sign it off. It's just a layer of protection that's extra for you. That means you as a general contractor, or you as whatever, even if you're doing work on your own personal residence, if that person gets injured in the course of their work, they can sue you. This is saying, I'm going to hold you harmless. If I hired you, you hired me, I'm not going to come back and sue you if I get hurt on the job. All right, so pricing example, like I said, there has been a shift, a little bit of shift, not so much on vacants, but more on rentals, long-term holds. So, on average, though, if you want, you can estimate the cost to insure a vacant dwelling is about $1,000 in premium for every $100,000 in coverage. So if you buy a property for $70,000, you put $30,000 in, it's about $1,000 of premium. Same thing about $200,000, 170 purchase price, doesn't matter, 150 purchase price, 50 in renovation, total cost in $200K. Looking around 2,000, and then you have, give or take, if you've had claims before, where the property is at, if it's located near each property with its last 4 digits of that zip code has its own protection class, and that'll give or take $100 here or there, but it gives you a rough estimate. So here, as you can see, I put the wrong thing up. So who we are and what do we offer? This should be kind of up earlier, but the one thing I do find out is people come up and say, "Oh, I just thought you did vacants," or, and I'm like, no. Actually, we don't make much money off of vacants, because if you think about it, we're making 10% on a $400 policy is $40. It's not much at all. The long-term holds are where we make the money. So when I find that out, I want my staff to start cross-selling. We need to let you guys know we offer a lot more products. We do regular auto home, umbrella. We do business insurance. We do all the anything you can pretty much think of, we'll be able to get to you. Just like as an independent agent, I have contracts with all these different carriers. I'm not bound to only one carrier, and that's all I can sell. One thing I did want to add in here before is, like, if you have a product that sounds too good to be true, like if you're getting a vacant policy that's $600 a year, there's something wrong. You need to talk to me. I've had people ask that in questions and answers. But okay, we have expert knowledge of product needs in real estate. We're able to insure in Illinois, Indiana, and Wisconsin. Here's where we get a lot of calls about umbrella, because obviously everyone wants to protect their assets, especially as you're growing and you have money invested. So like I said earlier, the number one liability exposure is what's parked in your driveway or garage. So, or on a dock, or on anything that moves that has a motor, because it can go 80 miles per hour in every different direction. Whereas your rental properties or your vacant property, the vacant property has a little higher risk because it's being renovated at that time. But even at that time, it's less than what a car is, because it's stationary. It doesn't move. So the chance of someone falling down the stairs and suing you for over the policy limits on that particular policy are slim to none. Now, if you have a car accident and you injure someone for the rest of their life and they're drinking out of a straw for the next 20 years and a judge rules, and in that meantime, you've rolled over 5 properties during that time and put them from your LLC to your personal name, and then you've commingled some funds on something else, your property management, you paid some out of your personal funds, whatever, a judge could look and say, okay, now all those things can be sued against. You want to know how much assets you have now? Sometimes that's hard to really gauge, but it's worth doing the time and putting together, and that's what we can help you with. And do you have enough insurance right now on your auto insurance? If you have state minimum coverages on your auto, you may not think it has anything to do with the investing, but it does. Because you get in a car accident, you could lose everything. And then there's no investing for any, you're going to be paying someone back and working 2 jobs for the rest of your life. So remember, you can be sued for potential life income. A lot of people are like, I'm 25 years old, what do I got? Right? Sue me for what? Right? Like in Rocky, when he hits that guy and knocks him out. Too old for some of you people probably remember that one. It's like what they can't sue you for is potential life income. So for the next 20 years, you're getting $1,000 out of every paycheck to go to this person that you injured or did when you flew through a stop sign. They can't sue against life policies with cash value. That's like whole life policies if you use it. And they can't sue 401ks. Those are all protected. You do something with your 401k and roll it over, then you have grounds to have it be sued against. If you have business or entity set up right with a cap of property, here's the biggest thing that I was trying to say here. So if you have business and entities, your LLCs set up correctly, you will never need a business umbrella. People call us up all the time asking, do I need a business umbrella? No, you should have a personal umbrella. And as we talked earlier, if you may need to move some stuff around. If you have 20 properties in an LLC right now, you should probably move some into a different LLC. Divvy up those assets so it's not all in one thing. But the personal, if you do not have a personal umbrella, you need to come talk to us. All right. I think I have one other thing, and then I'll go back to that questions and answers. I'll leave that up in a second. One second. One more link. I had one of my staff do like 10 hours of like training to get these things done. So I'm going to show them to you guys. It's only a minute. Everyone enjoying the weather, by the way? Chicago for you. Chicago. I'm not used to when people don't laugh. It's like The Office.
Yeah,
it's awkward. Michael Scott. Michael Scott who put that in there like that. I'm just getting into the office because I got my staff that's all into it, and I had that blackout phase where I had 4 kids and I only watched like Cocomelon and like Sesame Street. So like every movie and series is new to me, even when it came out like 15 years ago. I gotta get back to this PowerPoint. Here we go. All right. Here's my contact information for us. You guys want a screenshot? I'll leave it up for a second. Then we can do a little Q&A. Or we could just watch an episode of The Office. Just kidding. Here, sorry. Yes. So if anyone wants to, I don't know how you want to do, like, I can't really see questions that come up. Or is that chat thing? Should we, like, does anyone have any questions? Someone just left the chat.
Hi, Patrick. I've got a question for you.
Yes. Who's this? Sorry.
This is Robert.
Robert?
Yes.
Hi, Robert. How are you?
Hello.
Did you laugh at anything I was saying? Or was it like, because it's so awkward?
Yeah, I heard it. I don't know who Michael Scott is.
Oh, he's from The Office. Sorry. But no, I mean, like, I got you. All right. Shoot away.
Okay. So,
I got the Rocky
what
joke.
is-
I didn't get the Michael Scott joke. Sorry.
Yeah, I won't do any more of those.
all right. What types of insurance should we make sure our contractor has, like general liability and workman's comp? And what can we, as the homeowner who's employing them, have to defend us against them not having it? Maybe they're misleading us or just them not having it and we didn't know it. However that may work out. Is there something that we should do to protect ourselves against them not having
Yes.
proper insurance?
Good question. Very good question. Definitely. I'm guessing you're saying like because if you hire a general contractor, if you get a licensed bonded contractor, that would solve all that, but that costs money, right? So you guys normally want to be, you're taking on that role as a general contractor the majority of the time, I'm guessing. So when you're going out and getting, on certain projects, like I would get a licensed and bonded electrician, right? Certain things that are just imperative, especially for someone just asking a 100-year-old house, like certain things, I would make sure that one's licensed bonded. And then you, like the tenant policy that I told you to get for your tenants, if you have landlords, you ask to be listed as an additional insured. And if they don't have a policy or if it goes out for cancellation, you get notified. They'll let you know. By law, they have to notify you if you're an additional insured on the policy. So you request that. You don't just request a certificate. You request to be listed on the policy as the general contractor of whatever they're in. So that you want to see, they're kind of like accord forms. I don't know if I could screenshot and show you one of those. I don't know if I have the ability to, but they're kind of like a certificate of insurance. I have to find one in this thing, but those would be mailed out to you if they let their policy lapse, they make a change, do anything like that, or if they're, most of the time it's for a specific job, so it'll just be the length of the job, right? So that'll hold, you'll know they'll have insurance because they have to produce a certificate, and that's normally given to you by their insurance company. So you have to request that, though. Does that make sense?
Yes. Now,
Yeah.
let's just say you've got a guy that brings other people on the job site. Maybe you don't have a general, you're the general, and the people you've checked are insured. Then one day you show up at your job site and there's 3 guys you don't know about.
Yeah, that's what that subcontractor form is. So like it has some things, anyone that you bring in, so you want them to have that because yeah, you don't know, right? They bring in whoever. It's just like the whole thing is about you want to make as much profit as you can on here. So for the junk removal, for stuff like that, you're not going to find someone that's licensed and bonded. It costs way too much money. Those people do it for like, tearing down, demoing a stadium or something. Like that's the type of people that get licensed and bonded for that stuff, right? you hire, some young kids around the block, whatever. But that's kind of you can make everyone sign the thing. You can pick and choose. But if they ever got hurt, they can go against you. And the only way to protect that is have those subcontracts. Where was that at? It's not on this one. Nope, it's on this one. Sample things right here. I emailed those to Hugo's guys so they can send these out. And it says, if you read in here, any subcontract that you bring on would be under your policy or your responsibility. So they couldn't sue you. They could sue the person that hired them. Now, if they fall through the floor, not in the course of their work, that's covered under the policy for like the property. It would be the premise liability. You would get that on like the foremost or on a vacant policy under renovation. But if they're in course of construction, they have to have one of these signed because they can't, or they can sue you technically if they get injured. So the best way to do that is to request a certificate of insurance, have the subcontractor agreement filled out, and then make sure you're listed as an additional insured. Those three things. I don't know where to type that out. I'm trying to do it, but I think I'm like messing with the screen. I'm used to my Ring Central. I'm sorry. Does that make sense, Robert?
Yes, thanks a lot.
Yeah, no problem. If you got my email and stuff, if you want to email, I can clarify it more later on and show you some of the stuff that I was talking about.
Great, I will reach out to you. Thank you, Patrick.
Definitely.
Patrick,
Something come in. Do you offer cash value insurance? Yes. What do you mean by that? Do you offer cash value insurance? Like actual cash value? I think it's EGENIIP. I don't know what that means. We do insure 100-year-old properties, though. That's not a problem. Regarding renter's insurance, what do you recommend as minimum liability per person? Cindy, are you talking about the landlord insurance or the actual tenants that are in there? Cindy? Stroll, whatever. I don't want to mess that up. Tenants. Okay, yeah, it doesn't really matter. Tenants can have 100,000. You just want their property to be covered. Like, they're really not like they have a party there, I guess. But most like property management companies, if you're in a big tenant apartment, they're going to require at least 100,000. They're more concerned about them having their personal property not getting pissed off and saying, "Hey, your pipe burst, damaged all my stuff." In theory, they think like it's an auto accident. You caused it. You should pay for all my stuff. But it doesn't work that way. So the liability there is not real a big concern. All right, I know I saw one from ACV. So yes, actual cash value. We don't like those type of policies, but a lot of the vacant policies are written on actual cash value because you get back. You can't technically insurance is to make you whole. So if a house burns down, a lot of people are like, why are we doing ARV, like after renovation value? After unfortunately, the goal is to make you whole again, and they don't factor in the time that it takes and all that. But you can only get back and can't profit. So if you bought that house for 150, put in 50,000, the most you're going to get in with some built-in other stuff is 200,000 that burns down. It sucks, I know. I don't think I'm keeping up with the chats here. Hold on. Okay, how does personal work? For 1 million. So no one's going to sue you on a property. Again, people always get this messed up with a property. You're going to have every policy has a underlying limits, whether it's 300,000, 500,000. So rental landlord policy normally we always include $1 million or the max liability because it's so cheap. So that there shows you what the real, like they rate it so cheap because there's such little risk. someone falling down a flight of stairs is not going to go beyond the underlying limits on the policy unless you do something egregious like block off an exit and there's a fire and someone tries to get out and you nailed up and were told by that you're fined and saying you need to get this open, you never did, then maybe you would be. But the biggest thing is like I said, personal umbrella would be your auto accident. That's going to trigger everything. Or the only time I see your trampolines, your dog bites, and your pools, and your kids that throw parties that are under 21 are your four, but those are still less than anything that an auto would be a risk of. So all your leases should not include pools, should not include, you should have a dog breed, a banned dog breed in your leases. You should have, just to keep the properties good, I would just, no pets. I know, especially since how hot the market is, but all depends on the market. I get it. And then, they have to have their renter's insurance. You should keep all that stuff in there. So, Sir Air, can I answer that? How is it personal? Personal umbrella, basically, if you have, it goes off with your primary residence and anything that's in your personal name. So like your cars, a boat, a seasonal residence, something like that would go on your personal umbrella. Hence the name personal. If you have it named in an LLC, it doesn't go on that. And that's the reason you have it in an LLC too. You want it out of your personal name. So, so how was the personal umbrella evaluated? So basically, if you have 5 cars, you have 5 teenagers, your umbrella is going to be a lot higher. If you have 2 cars, you have no teens left in your house, and you have 1 house, and your umbrella is going to be $300 for $1 million, or maybe even less. Does that make sense? So if you add a rental property on an umbrella, say you decided to buy another under your personal name, decided to buy another rental property, it costs maybe $10. If you decide to buy another car under your own name, it costs another $100. Yeah. So if you can see where the rate is coming from, is where people get confused. So you really want to look at your auto insurance and make sure your auto insurance is up to par. You need to have 250, 500 limits at least. That's 250K, 500,000 per limit. And this is probably stuff you guys want to email me afterwards and talk about. But if you have auto insurance that you're not sure is enough, call us. Doesn't hurt to go over it. Does that answer? Saying it right?
Hey Patrick, this is George. I have a question in regards to tenants with dogs. So let's say if they do bring in a breed that's one of the aggressive breeds, how can you have the tenant, or what type of insurance can they buy to protect you in case their dog bites somebody?
They can't. Well, the tenant insurance is going to follow, but you rented that out. They're going to follow the money. They're not going to sue the tenant unless they have millions of dollars and they're renting from you. Doesn't make sense. You know what I'm saying? They're going to go after the person with the money. Though they may go after that. You could have them. I would ban. The problem is you have that in the lease. They get it in the middle of the year. You don't know about it, right? And then technically you covered yourself by doing that lease, by doing that stuff there. So you have a lot of ammo on your side if someone tries to sue you. They're not going to be able to access a lot of stuff because you took the right steps. Now, if you knew the dog was living there, blah, 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 that's a different story. But technically, that gives you the right to, it's a gray area, but you would be like, that means that you cannot have that dog there. It's just plain and simple. Well, unfortunately, and I'm a big proponent, I used to volunteer at animal shelters, and everyone said, don't say the, pit bull word, because unfortunately, when they bite, they tear. But I've seen little dogs bite that cause $100,000 something because their hand gets all swollen up. Because it's very rare though. I've had 1 dog bite, I've had 2 fires, and I've had about 1 million car accidents. I've had one person fall down the stairs, 2 people. So does that make sense? I don't know if I answered completely.
Yes, it makes sense, but yeah, okay. I mean, if they bring in the dog, even though if you try to, like, for instance, with COVID, there was eviction moratorium. You're not going to go to court to throw a person out because they have a,
Right. Well,
the courts wouldn't accept it. So what do you do at that point?
you're back there by the, you can't. I don't know how that would work. Is it like, can you still evict if they're breaking the lease though? I think you still have that if they were pulling drugs
No,
out,
not unless
right?
they're doing something illegal in the apartment. It's
But
not illegal to own a dog.
they're breaking the lease that they signed, right? Unless you didn't have that in the lease and you don't have any recourse. Then I would make that. I mean,
It said no pets, but there was COVID, and so there was an eviction moratorium, and you couldn't get rid of people.
right. I don't know if that's the case there. Then you would the insurance company has to provide coverage by that because there was a moratorium in place, just like they had to do when people went. If people couldn't pay, they had to still offer coverage. It was by law.
Okay.
So in that case, that's just such a unique situation. But you would have coverage by in that case because there's a moratorium put on there. And technically, as long as you let us know and did what you're supposed to do, look, this guy got the dog. We document it. There's nothing you can do. I can't get the guy, his family out because there's a moratorium. There's nothing we can do,
Okay.
But you're CYA. You're covering your assets. You're documenting covering your assets, right?
Yes.
That's all you can do at that point because you can't really. Just same thing with like they put in a trampoline or something like that in the middle of. You can't check on every property all the time. You don't know. So you can only do what you do to due diligence. And the best thing is just to make a protocol and make that standard. If you're gonna let dogs under a certain amount of weight, and it's got to be certain things. I don't know. That's kind of up to you on that end because that does the risk. That would be the only, a few things like if you decided to put an in-ground pool in or an an above ground pool and there's a rental. A lot of companies won't even take that, but there is some. But that is increasing your hazard, yes.
Then I have another question with like for liability and umbrella policies. So let's say if you do have teenagers in the house and they're insured, then you should have an umbrella, like you're saying. Let's say if you own vehicles, are you better off, like if you're buying vehicles under your company, to have a separate entity, since you said so they don't break the veil? But let's say have a management company, and the management company owns your vehicles. Let's say if you're buying corporate cars or whatever it is to do your stuff like that. So this way, there's no real assets in that company.
A judge will see right through that. They'll know. If you're using that just to protect liability, if you put an LLC, it's like an offshore. You know what I'm saying? You have to use it like treat a business like a business. That's what I said in that first thing. You've got to treat it. It can't be you putting a car into that name, using it for personal reasons for 99% of the time, and 1% is not going to fly. You know what I'm saying?
Yes.
They just won't do that. So if it's a true legit business that you're doing, entitle it in the business name and keep it, you've got to be so meticulous that you don't do anything personal with it, right? You like giving it to teenagers would be, it just opens Pandora's box, I guess. I would actually have to find out that answer for you the business, in essence, we wouldn't even be writing it under a property management. I mean, you could technically get it titled in there, but our companies wouldn't write a real estate management company unless it was a large one and it had like a commercial fleet, So that's more like I've had people ask that too. Again, it's tough because people come to me after they title it in their LLC too, right? And then it's like, well, okay, now what do we do? So I would say get in a personal umbrella and that solves everything. You don't have to name things in a business. You can still write things off for business use on taxes if you're using it for business. I don't know if you technically need to title it there. I mean,
But if you have the personal umbrella, can you buy a vehicle in the business name so this would get all the tax benefits and still have it insured under your personal business?
yeah, yes, yeah. But you're exposing two things at that time, right? But as long as if it's giving you enough tax benefits and it's like not that much of a, you're not doing much in the LLC, just the property management. Remember, if you get into an accident, then that opens up both the property management and yourself. And the personal umbrella would only cover the personal side of things. So if it was on a job site, you would need to get commercial auto insurance. And
Okay.
you start mixing commercial auto, that's big, because that's like what drive. Like I said, the biggest thing is autos that go back and forth. That's more likely to cause a umbrella claim than anything else, than any property you buy. So I would table doing that until you talk. I'd have to see your whole situation. And if you're truly using it like a business for a majority of the time, then it might make sense, But if you're using it to hide assets just to do that, I think there was a judge like 10 years ago that ruled on something like that found, that you just can't make that and then shell corporation, right?
Okay.
Because you give it, as long as it's legit and real, you're good.
Got it.
But yours is more, it depends upon your real estate, how much you have in that. If you're trying to do it and you have 2 properties, that's hard to really write off and figure out. I mean, you could write it off and still do it on your personal. Again, that might be more, I'd have to find out what assets you have and stuff like that, That'd be more like if a personal call tomorrow. I can help you, Greg, there.
Okay. Thank you. Got it.
All right. I'm trying to keep up with the chats too. Is that LLC? Then the LLC doesn't need an umbrella insurance. Wait, buying home properties are held in the LLC. Then the LLC. No. So Anthony, if you keep it if you think about each property you get has an underlying limit of either 500,000 or $1 million. I'd go with $1 million on the property, or $1 million, $2 million split. If it's under the LLC, it's going to be a business property, right? If you cap your LLC out, say you have 5 properties that are worth $250 each in the market. If you had to liquidate and sell them, doesn't matter about the loans you have on them, doesn't matter about any of that stuff. They just say, if you liquidate, here's, do you have over $1 million in that LLC? Then you may need a business umbrella. Or I would just suggest quit claim deeding it another LLC and then just start putting other things into that LLC. And so you get to about 4 or 5 properties, open up another LLC or series. Does that make sense, Anthony? And your personal insurance doesn't come into play that's the goal of your LLC, is to get your personal name out of there, right? So you don't want to intermix the two in theory. Anthony? Maybe he's left, I don't know. But
I'm here. I'm here. Yeah, I know. It's just I wanted to be sure you had said before that business that set up right, you shouldn't need business liability insurance, and so I just wanted to.
Excess business umbrella, you should not. Now, if you come to me and you have 30 properties under one LLC, you have a problem, right?
Okay.
You've outmaxed your limit on each property has their own set liability limit. Like I said, that $1 million, $2 million should be significant, should be sufficient enough for any kind of fall or claim. Really, the chances, even if you did have 30 properties in an LLC, the chances are very unlikely that you would ever have a claim. But you do have a gap at that point. But
Okay.
Personal umbrella would be more of a concern. If you didn't have a personal umbrella and you're talking to me about your 30 properties under an LLC and you had 5 cars and you had state minimum coverages, I would say screw your LLCs. You're fine there. You need to worry about your personal stuff.
Okay.
No?
Okay.
Does that make sense?
Yes. Thank you.
I didn't mean to say it like that. I was just like saying, like the whole thing is the bigger risk is personal, and it's when it moves in all different directions.
Right. Got it. Okay.
Everyone
Thank
can
you
be
very much.
accidents are what they called accidents. They're not meant, you know? So, how about any homeowners claims and stuff like that? I don't know if I kept up with anybody's. Did anyone else have something that I missed? I think the ACV one, that would be a separate conversation I could have with you guys another time about insuring it. Because there's ACV is not ideal because if you have say that $150,000 purchase price with a $50,000 renovation, say let's take that house, you have a $100,000 loss. So it's not a full loss, it's not a total loss. They're going to pay you ACV, so that's like what your depreciation is. So if it's $100,000 loss and they minus 30 years off, well, let's just say it's $30,000. You're only getting $70,000 on a partial loss, which not very fun, right? So that one, you want to. There's ways that the vacant insurance companies have. They either offer replacement cost or repair cost. Again, it's probably I'm going past my time, so it'd be something that's a bigger thing. Again, we're experts in this. Any one of the girls, anyone at the office can answer that. But it's all the any bigger questions I could answer too. But that would be more of a longer thing. A personal umbrella, a rider on a home. No, it's its own personal thing. A personal umbrella, it's separate. Indeed. And then Brian said, "What are the typical premiums on different?" There's no premiums on pet sizes. They just breed and they wouldn't accept the premium if found out that there was that type of dog. I can get you that. I can send them the banned breed too if you guys want that, and they can email that out. But that's not always specific to every carrier. We just lumped all of our carriers in and said, we'll just put the dogs that most of them don't want,
Hi, Patrick. This is Sam. Can you hear me?
Yes. How are you?
How are you? If I buy a property for $200,000 cash and planning to spend $100,000 on it to remodel it, so you suggest I buy $300,000 policy to protect the property from vandalism, from fire, from a slip and fall, or contractor that they work inside the house, right?
Say again. Sorry. So you buy a property for $300,000 and what happened?
And I spend $100,000 to remodel it, to fix it. And if I buy $300,000 insurance policy, that will cover all the workers that work inside, or if in case of fire or a slip and fall or whatever happens, right?
Yeah, so you have two different ones there. So you have your liability for slip and falls is separate. That would go under premise liability. If they're in the course of their job, that's going back to that whole thing about they're not insured under the course of their job. They're supposed to have their own insurance and their own workers' comp. If they don't, you got to get those forms signed to cover your assets, right? Sorry, language. But the other part of it, your personal, like the $300,000, if you get $300,000 in coverage for the $200,000 purchase price, $100,000 renovation, then and it burns down, you get $300,000 plus debris removal, whatever about that. And I did remember on that, Cindy, on that ACV one, if it's brand new renovation, obviously there is no depreciation because it's brand new stuff. So if you put a kitchen and it burned down and it was one that you renovated, part of that is not going to be depreciated because it was just built. Makes sense. But we don't like ACV unless we have to go there, unless you have like a lot of claims and just ridiculous premium, and that you totally understand what you're getting into before you're buying it.
So if the neighbor is walking in front of the property and it falls on their ice, that would be covered or not?
Yes. Yes. Even if a worker falls on the ice on his way to his truck, as long as he's not in the course of his work. So an electrician, you'd have to be doing electrician work. If he fell off, if he electrocuted himself or hurt himself while he was doing that or going towards the electric box and he slipped and fell, yeah, he had his own insurance. It's kind of a gray area there. If he was going to his truck after he was done working and slipped and fell, then that's premise liability, and that would fall under the policy itself. So that would be covered, but not if he's in the course of his work.
Okay, does another insurance company underwrites your policy, right?
Say again?
Is the Mccarthy insurance company or another bigger insurance company will guarantee you underwrite your policy?
Oh, yeah, no, we have contracts with all the different companies. We're just a brokerage so that we have access. It basically, it's different. You know, my dad was an Allstate agent for 39 years. I was going to buy his book out, but I would have been stuck only selling Allstate. I could never sell anything else. So the prices went up. I couldn't offer them something, you know. That's why my dad pushed me to go independent, and I'm so glad he did, because I'm able to offer such a wide variety of things. So if our prices go up on the auto, we have 5 different auto carriers that we can get you on. So we can still keep you in the agency. You just be with a different carrier of ours.
Okay. Yeah, so you shop around to find the best policy for your
Exactly.
customer.
Yeah, I may have gone
client.
over that a little too
Great.
fast. Sorry about that.
Sounds good. Thanks so much.
Same thing with the vacant stuff. We have our main vacant ones, but like we'll dig into deeper ones if we need it, like if there's a pool or if there's other stuff. But there's we'll shop out the vacants to get the best price too.
Yeah, most of the insurance company doesn't cover vacant properties.
Yeah, if you've heard, if you have a vacant policy and your insurance company has a commercial on TV, you got the wrong policy.
Of course.
you probably never, your vacant policy, you will never hear of that company most of the time, unless you know Foremost or worked with them in the past. But no, if you have State Farm, Liberty Mutual, whatever, Allstate for a vacant property, you have the wrong policy and you need to call us tomorrow.
Very good. Thank you, sir.
No problem. I know I missed some other these chats here. I'm having a hard time figuring to go down on here.
Yeah,
We
thank you
have
so
until
much.
10 p.m.
The reason, I'm looking at the chat that people were asking. Yeah, ACV is cheaper. I don't want to butcher your name. But yeah, maybe it burns down the land itself. So the land is not part of it. So that ACV thing, call me and we'll talk about it, or email me separately and I can help explain that a little bit more, because it's not bad if it's a full loss. It's that partial loss I talked about where ACV would kill you. And you would be out $30,000, $40,000 if it was a loss. All right, Brian, you said if I'm flipping a house with a purchase of 100K, with that ARV, right? You can't insure it for, you could go and insure it for 250K, right? But they're only going to pay you 150. So the only time we do that is if the lender wants that. Most of the time, they're going to require replacement costs if you're getting a hard money lender. The thing is, you can't profit from the goal of insurance. So you shouldn't put 150,000 into a house and say it burns down to get 500,000. That means you made how much, right? Everyone would be doing that. Oops, it burned on fire. Uh-oh, right? I mean, then you got enough for, so like that's the difference in the ARV part. It's impossible because first of all, the ARV is when it's sold, right? It really doesn't have a price. I mean, you have a general area, but until it's sold, that's the ARV. So how do you really insure it for that? You know, that's the problem there. That's where you can use replacement costs, Brian. Again, that's similar to what's her name's question above you. Ask me about that and I can explain it more.
All right. So, yeah, thank you so much.
Sorry, I know I'm on camera and I'm killing me. There we go. Sorry.
It's all right. Yeah, I believe yeah, we would like to respect everyone's time. I would encourage everyone to reach out to Patrick and his team. He has always been efficient in helping us, Chicago DealVault, as well as with the rest of our members. So, Patrick, you're awesome, and I'm sure our attendees have learned about insurance and the related items that you covered. Thank you so much for clearing our thoughts and answering the questions. Guys, again, feel free to contact Patrick. He has been our go-to guy for our insurance questions and assistance needed, and he has been successfully helping us, Chicago DealVault, Hugo's brokerage throughout the years. So,
Yes, I appreciate you guys having me on. You guys do an amazing job. So the people here, I mean, these guys are top notch. So I appreciate you guys for inviting me on and to be able to spread some knowledge because things have changed a little bit recently, and it's kind of good to see.
all right, perfect. Thank you so much, Patrick, on behalf of Hugo and Chicago DealVault, and to all our attendees tonight. Thank you so much for joining the webinar together with Patrick, and I do hope you have learned something from our insurance topic. So I would also like to share with you a little bit about Chicago DealVault. If you don't have access, I shared to you in our chat about how to get access for Chicago DealVault for 30 days. So this is how Chicago DealVault would look like. Allow me to explain at least 1 or 2 minutes. We have here access to MLS properties. This is live, so the properties are being updated as the way you search it in your MLS access. You also have here off-market properties. We categorize into probate, pre-foreclosure, upcoming auctions, vacant properties, and the rest. So there are a lot of options that you can choose. We provide you a list of private lenders, list of cash buyers, shadow inventory properties. We have other tabs that will be useful to you. These are, for example, the list of properties that we have for pre-foreclosures. We have here how the property looks like when you are going to access a certain property coming from pre-foreclosure. So you have all of the data that you need, the number of beds, the estimates. You also will be able to generate contracts, reports, approval letter. If you need one, we can also help you with that. So you can also generate the comps, sold properties in the area. You can make use of the rental calculator to know how much your property would be if you're going to do rentals. You can also do flip calculator to know how much your flip profit will be for a certain property. So there are a lot of functionalities actually. If you want to avail 30 days free trial, we give free training to get the full benefits of the software. Please just fill in the link that we sent in chat. That's how you're going to avail 30 days free trial. Also, we have mentoring programs for Chicago DealVault. We have the CASHFLOW Inner Circle and Wholesale Inner Circle. So feel free to check on this sites. Also, if you are interested to do one-on-one conversation with Hugo, feel free to send us an email to support@chicagodealvault.com. So he would also be able to share about the latest deal makers buying tour program that he designed, which has been successful and earning profits for the members. So again, feel free to send us a message if you have questions to support at Chicago DealVault, and also to be able to access our software. So those who don't have access yet. So again, yeah, I'm just going to stay in the in this webinar for at least 1 or 2 minutes. If you have needed assistance for Chicago DealVault sign up, I can help you with that. And I would like to thank everyone for joining today again. Please do attend our other webinar sessions incoming every Wednesday. So again, thank you and enjoy the rest of the evening, everyone. Bye-bye.